Good day, ladies and gentlemen. This is session 7 of the Africa Mining Summit Virtual Edition 2020 and Junior Mining, How to Survive and Thrive. My name is James Campbell and I'm Managing Director of Botswana Diamonds PLC. This is my 4th Diamond Junior I'm running. We're listed on the London AIM and Botswana Stock Exchange, and we're a diamond explorer focused on Southern Africa, being Zimbabwe, Botswana, and South Africa. We have 3 projects in Botswana, including the recently announced Sekaka acquisition from Petra Diamonds, 4 in South Africa, chiefly focusing on the area around Marsfontein, which is about 3 hours north of Johannesburg, and 1 in Zimbabwe. We have a mixture of projects. Some are 100%, some are joint venture, and some are in a minority stake. And our goal is to repeat what we did with African Diamonds PLC, where we took the AK6 project, which is now the Karowe mine, bought out and provided our shareholders a 25 times return on our investment. We have recently raised £300,000 last Monday, and this was at the same price as we raised money last in January. And this was, we felt a good kind of achievement, seeing the decline in the diamond price as a result of the pandemic. So today's session, we're going to focus on how can juniors succeed in today's changing and dynamic environment? What specific challenges are junior miners facing, and how can we address them? I'm delighted to be joined today by a number of very erudite panelists. First up, and ladies first, Olebogeng Sentsho, who is the Chief Executive Officer of Simba Mgodi Mining Incubation Fund, Errol Smart, who is the Chief Executive Officer and Managing Director of Orion Minerals, and Sam Chikowore, the Managing Director of Exporien Mining. What I'm going to do, ladies and gentlemen, is I'm going to first ask you to introduce yourself and the company who you represent, and then I'll pose some questions to you. But just to put some questions into your subconscious for now, some of the general questions which I'll be touching on will be, although Africa has some of the most prospective, yet underexplored and undeveloped geological terrain in the world, we struggle to attract the same levels of international investment as other parts of the world, particularly comparing ourselves to Asia and South America. And why is this? Is Africa seen as less investable by international investors? And why? Has the COVID-related crisis been the last straw? Or does it present opportunity for a new beginning? And thirdly, Africa is a third world environment with impoverished communities and sensitive environmental conditions. Do junior miners have ESG leadership roles to play? And what role does strong ESG play in securing exploration and development finance? So let's kick off the panel discussion by asking each of the panelists to introduce themselves. And I'll firstly hand over to Olebogeng to introduce herself and her company. Olebogeng, over to you.
Thank you very much, James. My name is Olebogeng Sentsho. I'm the Chief Executive Officer of the Simba Mgodi Mining Incubation Fund. The Simba Mgodi Mining Incubation Fund is a fund that supports emerging and junior miners, as well as companies that supply mining companies with inputs. We were established in 2017, utilizing some very innovative methods to raise our initial pools of funding. We've since grown and are currently supporting a number of high net worth projects in and around South Africa. We currently just secured a project in the Northern Cape. I was happy to see you were out there with me, James. We had a great deal of fun. We're growing as a company and we're looking forward to expanding our reach throughout SADC and hopefully to touch Central Africa soon.
Thank you very much indeed, Olebogeng. Errol, also who has a project in the Northern Cape. Over to yourself.
Hi, yes, thanks for having me. Orion is ASX and JSE listed. We've been operating in the Northern Cape for the past 5 years. We set out to break every one of the myths and the beliefs and the misbeliefs of the Northern Cape. We've shown that a person can actually get prospecting and mining rights, that you can carry out a whole intense drilling program, do an intense bankable feasibility study, and actually bring a project to a fully bankable state and fully permitted state. So our Priska mine, we've drilled out a 31 million ton resource there over the last 4 years. We've done a full bankable feasibility study. And earlier this month, we announced that we've got full permitting in place, all of our mining rights, our water rights, the SKA rights. So although South Africa is a tough operating environment, it is actually possible to operate. And in particular in the Northern Cape, we find that a user-friendly environment, and I've managed to bring foreign investment in to do that. We've spent 450 million rands there over the last 4 years. And we'll be spending 4.6 billion rand building the mine over the next 3 years.
Great, Errol. That's quite something, and we'll be touching on many of those things as we progress the panel discussion. And Sam, you're from Zimbabwe. Please tell us a little bit about yourself and your company.
Thanks, James. My name is Sam Chikowore, as you've heard, from Exporien Mining. I'm the managing director there. Our company, Exporien, has got concessions in Western Zimbabwe in the Zambezi Basin for coal-bed methane gas. So this is a work in progress in terms of the exploration. Currently trying to attract investors who can come in with the required funding, to progress that exploration program. Besides the coal-bed methane gas concessions, we also have in Chirugwi, which is central Zimbabwe, claims for gold, which again, we're looking at inviting exploration funding to undertake that exercise. So Exporien as a company does have the two projects, which is the coal-bed methane gas, CBM, sorry, and also the gold in central Zimbabwe. We both which are looking for investment, to take them to the next stage. Thank you.
Thank you very much indeed, Sam. Much appreciated. Errol, if I could start off with you in terms of our general questions before we kind of dive into specific questions in terms of each of the panelists. If I could ask you, why do you think Africa is less investable by international investors, and why?
I think Africa's managed to get itself a bad reputation because governments don't have stability on regulations. Everything is always changing every day. Whether it's tax, whether it's mining codes, whether it's just the operating environment. Investors hate change. They want stability. They want to know for a long period of time, if they go and invest their money, are they going to be able to realize their investment without the whole macroeconomic environment around them changing. Unfortunately, African leaders tend to see the opportunity every time times are going tough. Let's stick our fingers in the pie and try to grab out a couple of extra cherries. And that just chases investors away. So geologically, I think we've got some of the most awesome ground in the world. We've got the people, we've got great opportunities. I think our impediment in Africa is really the regulators and the governments that we work underneath. So unfortunately, we've got to take a leadership role there as well and actually interact with those governments and give them guidance on what is actually required to get an investable environment.
Great, many thanks indeed, Errol. Olebogeng, what's your take on this question? Why is Africa seen as less investable, particularly when you compare ourselves to other developing nations and continents?
I think on that point, I agree wholeheartedly with Errol in that, unfortunately, on the African continent, there isn't much continuity in terms of our mineral policies. What's happened in the past is that as governments have changed, so has their mining policy. This lack of consistency in policy and specifically mining policy.
Bless you.
Excuse me.
Bless you. Spring flowers catching up with you.
So unfortunately, the inconsistency in policy is a run-on effect of changing governments, and governments that are unable to sort of plot out long-term plans, not just for the government of the time, but also for the country. It is because of this that mineral policy keeps changing. Now, you look at the South African context in particular, every time we have a new administration, they tackle the mining charter differently. This is not favorable because investors want, especially because mining is such a long-term investment, investors want to know that the rules won't change halfway during the game. And because most African countries are victims of their own bad policy design and bad policy framework, unfortunately, investors find themselves at a loss. And they find themselves that, in addition, unfortunately, how we've drafted our mineral policies as a continent is not necessarily as friendly to investors as you'd like it to be. Our approach has been reactive rather than proactive. We haven't innovated much in the last 50 years in terms of how we approach our beneficiation strategies. And as a result, investors are unable to see how far our mining industries can go because we simply haven't put in the work to make sure that the frameworks that we build as a continent and as individual countries speak comprehensively to any plan that an investor would want to invest in over the long term. So for me, I think that those are the key reasons why investors are often quite reluctant to come to Africa.
Thank you very much, Olebogeng. Sam, from a Zimbabwean perspective, how do you see this particular question? Particularly in connection with a comment you made earlier in your introduction about looking to raise funds for your projects.
Yeah, well, I'd want to agree with both Errol and Olebogeng in terms of about investment wanting a more predictable environment. I think we've had a problem of raising funds because our environment is not so predictable when it comes to investment. We've got a lot of policy changes over a very short period of time. So mining by nature, being a long-term kind of investment, would want a more predictable environment, which unfortunately in our terms is Zimbabwe, and I think as regards to a number of African countries as well, that's not something which is very forthcoming. So I think we could be better off if we can have an environment which is more welcoming and more predictable.
Thank you very much, Sam. If I could just share as well with the audience two of my observations on this question too as well, is that there seems to have been a sea change post-2009 compared to where we are at the moment. Pre-2009, many offshore companies such as BlackRock, Fidelity, JP Morgan, etc., were fairly willing to invest in exploration companies, particularly a basket of exploration companies where they could mitigate their risk. But subsequent to 2009 and the global financial crisis, they seem to have, their risk tolerance has dried up considerably, chiefly because of the next point, which I'm going to ask your audience on, are more compliance requirements. And if you're a fleet-footed junior, yes, of course, you must be compliant in terms of the legislation and everything that you absolutely do, but the cost of doing business just goes up. So if I could maybe start with you, Errol, on the second general question here about the influence of ESG and the importance of ESG, particularly in terms of where you are in the project development pipeline.
Well, I think in general, we are seeing that the big investment funds and the pension funds around the world are paying a lot more attention to ESG. It's just become a financial obligation. And it's one of the first questions that a fund manager asks you and an investment analyst asks you is, what are you doing about ESG? So money talks, and money talks with its feet. And if you're not doing ESG, money walks in the opposite direction. So I think as juniors and as explorers, we've got to be paying attention to ESG, and it's actually a capital investment. So the way that we run our business, we set out from day one to actually invest actively and get very involved in the ESG development for the project from the time we drilled the first hole. So that by the time we had the mining right, we had a community that was on side and supporting us. I think it's become an obligation. You know, I think for too long, particularly juniors, unfortunately, I think some of our peers have let us down. They've gone into communities, they've carried out drilling programs for years and years, they've done exploration, and they've left. And other than creating a few, you know, low-level labor jobs, they haven't left much of a positive legacy. I think it's only fair to ask that the community say to us, listen, even when you're exploring, you can have some impact. Now, I don't think you must overburden the junior miner and explorer, because commercially we just can't do it. There isn't enough money to do that. But with small amounts of effort and time investment, junior miners are managers and they're innovators. And when we apply our minds to things, we find solutions. And I think that by just applying your mind and helping to work with the community and the local authorities, you can actually unlock ESG opportunities early and let the community share in the value early. By the time you get to mining, then you've become a team with your community and it's easier to develop it. And the reality is, unless you do that, you're just not going to get the money from the big funds, particularly the foreign investment funds that they've got that as a key principle now.
Olebogeng, you're running an incubation fund. How important do you rate ESG in terms of your overall framework when you look at projects and when you talk to investors?
ESG is actually a pillar of our values at SMF, specifically because we understand the importance of social license. Social license is one of those things that without it, mining becomes an exceptionally difficult thing to do. Whether you have the mining right or the money, without that social license, you will be unable to run profitable operations because your community does not stand behind you. In recent years, we've seen massive protests by communities in mining towns that felt excluded by the mining companies that they were hosting. We feel that that should never be the case. In fact, it should be quite the opposite. The community should be protecting the mine. And in order to get a community to protect a mine because they see it as their source of economic activity, to get them to that stage, you need to make sure that the social license that you've been able to get from that community gives you the trust of the community wholeheartedly. As part of an ESG strategy, we believe that integrating the care of that environment is also pivotal because those people often rely on that environment for their agricultural needs. So, and we prioritize the communities that we work with when we start our projects. More importantly, we understand that global funders do look at ESG as one of the first aspects of whether or not, or should I say, one of the first boxes to be ticked when they're deciding to invest or not. And we understand that as part of a global initiative to uplift lives and to alleviate poverty, it is imperative to ensure that you constantly put up front your ESG strategy and you put up front how you manage your ESG. I think on a more practical level, there's a community that we've been dealing with in Limpopo, in the region of Hamatabata, close to Leboakgom. That particular community has been destitute for over 40 years, having seen mining companies come in and out. So they are deeply distrustful of anybody who comes offering opportunities for mining. As a result, what we've been able to do is say to them, if you guys feel that way, how about we walk the journey with you? We don't speak to you only when we have to. We physically walk the journey with you. You come with us when we have to see the DMR. When we do our drilling, we will make sure that we employ some of your people on site. We will walk the journey with you so that at every stage, you understand where your benefit comes in here and we can come to an agreement about profit sharing at the end of it. It's given them a lot of comfort and it's given them confidence and it's given them the ability to even come to us with opportunities in the area. I think that this is a very exciting example of how when you change your your perception of communities and how you change, and when you change your approach to communities, things can really change. I mean, the project has been greenlit by the DMR and by the Local Economic Development Agency, so we're very, very excited. And I think it's a shining light in a very darkened corner of the country, especially where minerals are concerned. So I think for me, you know, because it's a pillar in our value system, we value it a great deal, and we see it as a definite pillar for success.
Thank you, Olebogeng. Very, very interesting. And we also have a project just north of Leboa, Cornwall, and we follow a very, very similar track to what you're doing. And so far, no issues, and we've been able to progress in the way that you're progressing as well, which is great. Sam, tell us your experience in Zimbabwe, particularly in terms of the political climate you're currently working with.
Right. Just to touch on the ESGs, I think that's an investment which you can no longer afford, you know, to ignore, because one, for you to unlock the funding, just as the other speakers have alluded to, you need to pay attention, you know, to the ESGs, and also the communities in which you're working. They've become more and more aware of their rights. So going into any community, you have to have a plan in place, which is solid for that matter, as to how you are going to address those issues. So even now at political level, they now have an understanding that you could never run, you know, underrun, you know, those issues, because those are very predominant at any discussion in terms of, you know, coming up with a project. So things have changed. Before, one could, you know, ignore about it and just carry on to put together a project. But I think as people become more and more enlightened, especially the communities around where you would want to establish those projects, it's no longer, you know, business as usual. You would need to take care of those ESGs and make sure that they are adequately provided for, because people are now more aware of what, as to how they're supposed to be treated by an investor coming into their community. So yeah, which I think really is a good thing. And in terms of sustainability, that talks a lot to that as well. So I think we are getting there, and even from government departments, they will try and enforce to make sure that you address issues pertaining to the environment and so forth before your project can see the light of day.
Sam, if I'd like to share just a very brief example of my experience in Zimbabwe, you might know that we've partnered with Vast Resources on a potential concession in the Marangi diamond fields. And we've become under quite a lot of criticism for getting involved in that area because of the number of alleged abuses, whether it be financial, environmental, humanitarian, etc. And yes, one can't walk away from that, but our take has been, well, we're a publicly listed company. We just have disclosures like any other publicly listed company, and we will follow the same ESG principles as we do in Botswana and South Africa. So if you don't allow companies such as ourselves to go in and do this kind of work, you're never going to get that fundamental change. If you keep on doing the same thing, you're going to get the same result. So we've kind of countered it and trying to be positive about it, that this is how one can actually engineer change, by inviting in companies who do articulate and who do live these principles by doing work in those particular areas. Needless to say, we haven't got the license yet, but that's a story for another day. So,
yeah,
Errol, sorry, Sam, carry on. Yep.
Yeah, I was going to say, but I think that would really be a very positive development if you guys were able to come in and you were able to get that license. I think leading from, with the experience which you've got in other jurisdictions, I think that will really make a lot of difference in how operations might have been done in those areas previously. So I think that would really be a very welcome move.
I hope so, Sam, too, as well. And I hope and pray in the fullness of time that that license will be delivered, and then we can walk our talk there, which I look forward to. Absolutely. If I could now start to dive into each of you in terms of your own specific areas and give your own examples about how we can survive and thrive in the current environment. Errol, your company's share price has trebled over the last 3 or so months. Could you tell our virtual audience why this is the case and what you are doing differently and what we can all learn as junior miners and our audience as miners, suppliers and investors can learn from Orion Minerals?
Yeah, I guess it all comes down to one thing in the end: persistence. You've got to believe in what you do. You've got to set out with a strategy and you've got to execute it. And the share price eventually speaks for itself and the value starts. You know, when I brought Orion over to South Africa, everybody said I was mad bringing an Australian company to South Africa. I think we had a market cap of about $10 million at the time. Today we've got a market cap of $105 million. You know, it's come because with hard work. So it's that whole investment in getting your exploration done, getting your permitting done, every level of permitting, ultimately to get to that point when you do get your full permitting in place. Africa, and there's other places in the world as well, but Africa really offers the opportunity for very, very significant mineral deposits that are undeveloped and underexplored. All of us have got a textbook full of the next one that we'd like to do. And the only limitation is capital. What we've got to do is get the investors over the line and get them to trust junior mining and to trust the environments where we operate. So, you know, our view was and our strategy was that we had to take a leadership role. I took a leadership role in the Minerals Council of South Africa. I'm on the board of the Minerals Council. I'm the chairman of the Junior Emerging Miners group in the Minerals Council. We've become a very active group and we managed to get the large major mining houses in South Africa to back junior mining. We've got the government to recognize the importance of junior mining. We got involved in the negotiation of the mining charter. The recognition in the mining charter that during the exploration phase, you are not extracting the minerals, you're actually only adding value, and the value comes from investors' money. So we got the government to agree and that prospecting is actually free of mining charter obligations. Once you've proved your mine and you've got your bankable study and you go get your mining right and now want to proceed to extract the minerals, then you need to do all of the mining charter obligations. All of those things were very important and they were steps that we did over 5 years. And it all finally came to a head and with much frustration because we expected it earlier in the year and COVID interfered and everything. But we finished a bankable feasibility study in a record time. You know, we managed to achieve, when we took on the project in 2016, we didn't have any active prospecting rights. They were expired. We managed to get 2 prospecting rights. We managed to drill out the ore body, drill an 86,000 meter drilling program, first-class engineering and techno-ecological surveys that were done and studies that were done, and getting the mining rights granted and all the ancillary rights. It takes a whole lot of hard work, and I can tell you that there were many times that it was a thankless task because as a CEO of a junior company, you get beaten up by shareholders every day. Everybody's got a different idea, but we had to stick to our path. When we were investing money in ESG, people said, why are you spending money on that? Why aren't you drilling more holes? Why are you running around arranging bicycles for the kids to get to school? But all of that paid off. And as a result, the community threw their weight behind us to make sure that we got our mining rights. And the Premier started paying attention to what we were doing. And he got involved and said, listen, DMRE, you must do what you've got to do. Department of Environment, you've got to do what you've got to do. Department of Water, you've got to do what you've got to do. So it's all interrelated, and we must stop thinking that we can just be drillers and geologists. We can't. It's a bigger business. And if you want to come out at the top, you've got to look at the full scale of the business to get over there. So yeah, what finally triggered it? Why did our share price rocket? Suddenly the market said, you know what, you can do it, and you did do it. Here's proof. You've got yourself fully permitted, you've got a bankable study, and you're ready to go. And you're ready to go into construction. And of course, we were fortunate, we had chosen the right suite of minerals. It's the glory suite at the moment. You know, the battery metals are absolutely screaming, and copper is going to do well for us. You know, the Northern Cape has produced over 2.5 million tons of copper. It hardly produces any copper at the moment. It's going to produce copper again because just everybody stopped exploring and developing mines. The geology is still there. There's huge opportunities, and there's a lot to come.
Thank you, Errol. If I could just add one small bit on that from our perspective, is I completely endorse your point of view that even if minerals have been mined for over 100 years in a particular area and may not have been mined or looked for 10 or more years, with the advent of new exploration and mining technology and new thinking, old deposits which were seen as being marginal or sub-economic, or perhaps aren't even discovered, are now open with current technology as it is. And I'm sure our children and our children's children, if they choose the kind of the path that we are following, will say the same thing. With the technology available at their time, they will discover more and more deposits and have different geological models and have different ways in which to mine it. And I don't want to say too much more. We're looking at, would you believe, dredging in the middle of the Kalahari as waste stripping. People think we're mad. What? In the middle of this Kalahari, why would you dredge? Well, the water is abundant once you actually get below the water table. So why not use what De Beers and many others are doing on the West Coast by doing large-scale dredging and pumping with water? It just makes the most commercial sense to strip down, and that almost halves your operating cost in terms of stripping. And we might be the first company to tackle it. If we're not, someone else will do it. It is what it is. Olebogeng, over to yourself. Tell us how you've been able to build your suite of companies within your incubation fund, and the challenges you've had in terms of raising funds and progressing those projects.
James, you've just given me such a brilliant idea. I never ever thought of dredging. You just solved my topsoil stripping problem, because we're dealing with beach sand, and dredging makes so much sense right now. It makes perfect sense, because I mean, we have to move almost 1.4 million cubes on a monthly basis. So it's a mammoth task for us at the moment. It's why we had to be out in the Northern Cape for so long. But just to go back to the question that you were asking, and I'm like writing notes furiously on the side here about that dredging idea. When we said we wanted to focus specifically on supporting prospectors and developers, everybody said we were crazy, because prospectors and developers don't have anything in hand until they have those bankable feasibility studies. And until that project moves all the way up the value curve, it really has very little value. And it was a niche for us. Unfortunately, because South Africa generally has an inappropriate risk appetite for its own mineralization, which is something I say all the time, nobody could see the vision. And we had to be very innovative in how we started raising money. We started with crowdfunding. But as we've grown as a company, we've found very innovative instruments within the banking system that have been able to assist us in making sure that our projects come to life. Things such as forward buying agreements, logistics bonds, equipment bonds. Those kinds of instruments are integral to prospectors and developers, and they make life a lot easier, especially because they are bonds that banks understand. The biggest problem we've had is that bankers don't speak the same language as miners. To get miners to speak banking and to get bankers to speak mining is a mammoth task. But what we've been able to do is to bring both sides of the value proposition to the table and discuss it without trying to get into the technical complications of each individual pursuit. This has been almost revolutionary for us, because we've now been able to attract investors who have a long-term outlook for the continent and for the mining sector specifically. as our projects have grown very slowly over time, and I mean, specifically in this time of COVID, most of our projects actually got fully funded, I think, in March. So we spent the entirety of COVID running around trying to make sure that our fully funded projects were getting into production. But I think that COVID has it's revealed an underbelly in the mining industry. There are companies out there who have been living on marginal profits, if any profits at all. And those are the first companies to go, and those are the first companies to actually come to us. So I think that when we think of funding in the mining sector, we must think of it the way we think of investing in the mining sector. And that OPEX that you need, that additional 6 months of OPEX that you need on top of everything that you make, that is integral now. You know, we're building it into our financial models to say whatever happens to this company, it needs to be able to survive for 6 months without a cent coming in. You know, because COVID has shown us that too many companies are living too close to the edge. So as we incubate our companies through, we're acclimating them to that type of living and that type of sustainability, because I think that when your companies are immersed in a culture of sustainability, they're able to survive longer, and they're able to find themselves in a position to become investors for themselves and to find better projects and to grow themselves as well. They're able now to take on tasks that they were previously not able to do, because most companies find themselves suckling at the teat of an investor for far too long. We don't want that. We want our companies to be able to get started, to self-fund, to grow, and to remain sustainable. It shouldn't be that a mining company is in incubation for 10 years. That's not feasible. A mining company has all the resources it needs in order to grow quickly and to become as profitable as it possibly can, if given the right guidance and if managed prudently and that cash is mapped properly. That's just from the funding perspective. From the mining perspective, we found that, you know, when you want the best, you don't skimp on the skills. We have gone on one crazy recruitment drive where we have found the best in the business who are able to come to us and say, we love this project, we believe in what you do. We're able to put skin in the game and give you these plans and plot out these mine plans, give you the scheduling so that you can convert your mineral resources to mineral reserves. That's pivotal for us, because what we've never been able to find is those skill sets. And as I was saying to you, part of our recruitment drive was also getting partners in who had that EMPC experience, who could say to us, we're able to do this planning at a high level. You don't have to pay a Wally to get this done. You don't have to pay a DRA to get this done. We are in-house now. So some of those pivotal sort of saving mechanisms and those agile little tweaks that you make when you're starting your business strategies, I think they're pivotal. And I think that post-COVID, those will be some of the things that a lot of companies are going to implement going forward. And I think a lot of people are going to find themselves very, very rich based on what we've been able to innovate within the sector.
Great, thank you, Olebogeng. That was really actually most encouraging. Sam, how have you been able to access your projects and get them actually started in Zimbabwe?
Yeah, well, if I may tell you that story, it wasn't an easy journey, given the background of our politics here, because basically you find just trying to convince our government or the relevant department that you feel there's an opportunity. In my case, that would be corbid methane gas. I mean, it took me forever just to get some of those licenses granted. I'll tell you now, our first application was in 2005. We got licensed for 2 out of our 3 concessions in 2006. And we struggled to get the 3rd concession licensed. And that took a period of about 12 years before it eventually came through. Now, during that period, obviously, you had funders waiting just to see, how things are going to go. And now imagine someone sitting on the edge for a period of 12 years waiting for something to happen. obviously we had a number of potential investors, walk away because, who's going to sit around for 12 years to get things done? So I think what we have, though, been able to do during that process is to get government to realize that investment, as Errol put it before, has got legs, and it will just walk away if it feels unwelcome at a particular destination. So we've had to lobby government to say, look, there is a need for you to attend to issues of licensing in very short a time as possible, because we are all competing for the available investment funds. So if they will not be proactive and get things done in a much shorter period, and obviously put in place policy which is attractive enough, then we'll never get the desired, investment finding its way, into our jurisdiction. So for me, I would say maybe it's been a learning curve for both ourselves as junior exploration companies, and also, for the government. So what we are now actually doing at this stage is lobbying, for a junior mining desk to be available in the Department of Mines, which attends to our needs, because you could never attend to us in a uniform manner, when you compare us with the major players. And also, I think we need to get the understanding that the requirements of junior players and those of the major mining houses can never be the same. It's not same size fits all. So they have to attend to us differently. And also what we are now trying to have going on is the conversation between ourselves as the juniors and the big miners coming in to say, look, the two of us are not in competition, but we believe that we actually complement each other. And from that perspective, we should, be there, lobbying for each other, so that, what's been missing from, or rather the attention which the junior miners have not been getting, maybe if that voice could also now be coming from the major players, betting in our corner, maybe it's a conversation which could now be more credible, and that might then assist the juniors, to lift off the ground much easier than what's been prevailing at the moment. So that's a conversation that's ongoing, and I hope we are getting now to a point where things might start working out compared to what we've faced in the past.
Thank you very much indeed, Sam. This will be the last kind of round of questions. So if you could use this as an opportunity to summarize as well, and to give some guidance to the members of our audience. So starting with you, Errol, and switching your hats over from Orion Minerals to the Minerals Council, and the great kind of work that you've done. You've mentioned in terms of the high-risk environment around exploration and the lack of empowerment requirements there, which change when it goes to a bankable feasibility study. There was some press about a month ago about looking at providing investment stimulus in South Africa, something maybe more meaningful than Section 20 that we have in this country. So in terms of your guidance with your Minerals Council hat on, Errol, what could you tell us?
Two big initiatives that we're driving at the moment is something equivalent to a flow-through shares thing that has been extremely successful in Canada and Australia, mobilizing investment, because we can demonstrate the economics of investment in junior mining. Actually, because junior mining happens in the rural areas, it doesn't happen in the cities. By giving a little bit of a small tax break to investors, you could stimulate them to invest in junior mining in remote areas. That immediately goes into paying local salaries, local suppliers, your diesel, your fuel, all of those things. The flow-on effect of investment in exploration is huge. You know, this is what I kept saying to the DMRE over the last few years. It's not the mining of minerals that actually makes the money. There's actually, from the day that you start investing in the exploration of for minerals, you're actually adding to the economy in the local areas. And people are starting to recognize that. So that's one initiative that we're driving hard. And we've got an awesome presentation put together that we're going to be taking to Treasury and to government over the next couple of months. And most importantly, to get the DMRE to buy into it. We believe that the DMRE must be representing us and taking us to Treasury with us. Second thing is the life of the prospecting rights. Prospecting rights should have longer term than what they currently have. The current 8 years is just not suitable. You cannot find a major mine in 8 years and take it to a bankable feasibility study. Yes, I know we've just done it, but it was an exceptional case. Everybody should be able to do it, and we need to get greenfields exploration going. So those are two big initiatives that we're driving at the moment, but it's about making junior mining relevant and making junior mining matter.
Errol, that's fantastic. And I've often said the same thing. If you look at the Canadian flow-through share scheme model and the Australian equivalent, it's actually no surprises that most of the world's junior mining companies either come out of Australia or Canada, and why, even though they're very developed mining jurisdictions, they still have a huge amount of exploration going on. And they're still making discoveries, and they're still building mines. So there's absolutely no reason why we can't replicate that in this country. And I applaud the work that you and the team are doing at the Minerals Council on this. Thank you.
Thanks a lot.
Olebogeng, in your kind of wrap up and summary, you kind of hinted earlier on in the conversation about the importance of partnerships. In terms of developing projects. Maybe in your summary, could you kind of embellish that a little bit more?
Absolutely. Thank you, James. And Errol, I'm so excited. I can't wait to hear what you guys are up to with that new system. Unfortunately, Section 12J has let the juniors down tremendously. Hopefully, with your new intervention, we'll be able to see some real movement of FDI into the South African junior mining sector. You know, as I've been building this company, what I've come to realize is that to a very large extent, there are big OEMs and EMPC companies who have massive balance sheets that simply do not, they have lazy balance sheets. The reason they have lazy balance sheets is because they have all this equipment, all these skills, and essentially nobody to work with because everybody views them as too expensive. Of the 4 that I've approached as SMF, I think that 2 have come back to us and said, we really love what you guys do and we're willing to pursue your project at risk. That was a massive vote of confidence for us. And we were able to see that a lot of these companies do find value in the junior mining sector. And for them, it's not that much of a massive capital outlay. For them, it's something they would have done either way. But just to delay their gratification for that little bit to make sure that a profit goes, I mean, it goes a long way. They are able to see the value because they are able to put together the models. They know what the mineral economics looks like, and they know that the money will come out on the other side. So I think that it's very important as junior miners to seek out those types of partnerships and to make sure that we are aware of the companies that are willing to help us. Often we feel as junior miners that we're marginalized because our mines don't live for 25 to 45 years or whatever. But I don't think that that should be the important thing. The important thing should be that we have value. There's a value proposition on the table. It requires finance and it requires support. Can you help with that? And your money will be on the back end. A lot of these companies have the balance sheet to support them through the development of a mining project. And if they see value in that mining project, they're more than happy to come to the party. We've been able to get into incredible partnerships with 2 companies, one named Ayana Operations, which is a group of metallurgists, and P2E Consulting, which comprises of process engineers, mechanical engineers, and electrical engineers. And they've been able to do amazing work for us. Truly inspired work. I mean, they've literally taken a few drill hole results and compiled them into these beautiful models of ore bodies. that are competent to be converted into resource statements. So I think that in our pursuit, we've been able to make sure that we partner with people who understand exactly what it is that we're trying to do. Often banks will not be your biggest ally because they don't quite understand that a junior miner sees a mine long before there's anything on the ground. And when you're in conversation with people who understand that particular sort of vision, it becomes much easier for you to sort of be able to twist their arms and say, walk this journey with me. What we've also found is that, you know, there's always that illusion that you want to own 100% of your project, but it's not necessary, because often we own 100% of nothing, whereas we could own 10% of a billion rand company. And we've become comfortable with that. We've become comfortable with understanding that you'll always realize value. You don't have to own the whole pie in order to enjoy it. And it's relieved a lot of our stress, because we find ourselves able now to share a lot of our concerns and our challenges with our partners. It makes the movement of cash easier, and it also makes our burdens quite light. So I think that when junior miners are trying to pull themselves together, they need to get into those impactful partnerships, not just for JV purposes, but also to make sure that all the machines are running on time and all the processing is happening. For us, I think it's been a game changer. And I think that when our projects are fully productive and we can actually demonstrate the types of projects we're able to bring into the system, it's going to excite the industry. Because to a very large extent, I think the industry is a bit dejected at the moment, because a lot of people feel that if the money is not flowing in, then it means that the industry is dead. I think that that's completely wrong. You know, the majors are leaving now. It's time for the juniors to take up those stakes. And those majors are leaving these OEMs and these EMPCs without any business. But these are the companies that understand these assets. As juniors, we need to fill that vacuum and make sure that we take those partnerships forward so that these assets can remain productive. So for me, like I said, you know, partnerships are changing the game for us, and I'm quite excited to see what they'll be doing for us in the future.
Thank you very, very much, Olebogeng. That was a great summary and a good emphasis to build on Errol's point around financing, about partnering with appropriate people. Sam, in your summary, could you perhaps maybe shift focus a little bit, possibly, and sell Zimbabwe as an investment destination for juniors?
For me, I would say that great opportunity does exist in Zimbabwe. I think for investment, it's just a case of getting to understand, you know, the environment a little bit more. It might not exactly be what you might find in other jurisdictions, but what I can say at the moment is that our government is really up to the task in terms of selling, you know, rather inviting investment into this country. They are very keen that economic revival comes, you know, from the mining sector, combined obviously with what agriculture is also trying to do. So I would really urge investors interested in coming through to maybe just try and get an understanding rather than rely more on what they've heard through the mainstream media as regards to what Zimbabwe is all about. But maybe just take more time to get an understanding of what opportunities really exist in this environment. And I'm sure they will discover that there is a lot to be made than that they might anticipate. Because if you were to take a look at how many companies which are listed, say, on the Toronto Stock Exchange, on the ASX, which are currently doing business in here and surviving, then that must tell a story to say it's not as bad as it might perceive to be. So opportunity does really exist, and I think it's something which potential investors must be prepared to look at. So for me, this is an invitation. And that said, I just also want to say that as juniors, we do have specific roles to play, which might not necessarily be the same as what the majors, might be willing to look at. So from a government's perspective, I think they should really take on board the issue of really concentrating on what the junior mining's aspirations are, to try and promote them so that they can execute their role, to the best, or maybe to the optimum level that they can. So I think that's what I would want to leave with both our investors and obviously with our governments, to say, please take note that our juniors do have a role to play and they cannot be ignored. Thank you.
Thank you very much indeed, Sam. And thank you very much indeed, Errol and Olebogeng too, for joining this panel on junior mining, how to survive and thrive. And I hope those in our virtual audience have been able to take something away, a level of optimism possibly, and some practical suggestions about how we can continue the exploration and mining process from a junior perspective in Africa. So that concludes session 7, Junior Mining, How to Survive and Thrive in the Africa Mining Summit 2020 virtual edition. Thank you very much, ladies and gentlemen.
Thank you.
Thanks so much. Welcome.
Thanks, James.